joining me now for a closer look at what's playing itself out in that market scene is Robert Towell from Sasfin Securities. Rob, a pleasure. Good afternoon.
Afternoon.
All right, Rob, it does look like markets are having a day that I can only describe as meh. It really does look like that GNU rally has kind of fizzled out. But also Asian stocks, European stocks, not quite upbeated today as well.
Yes, locally our markets had a very strong rally. We also had futures close out yesterday, so we saw really a huge amount of volume in the market yesterday. I think we had about 57 billion go through the market. So we've seen a much quieter day on our market, but what's interesting, you're starting to see the South African equities a little bit today, a little bit firmer again. Retailers and banks clawing back some of their losses from yesterday. So still a relatively strong week for South African equities. And I still think the market's waiting to see what the cabinet positions will be like later today from Cyril Ramaphosa. If that comes out market friendly, I think next week you'll start to see the rand continue to firm and you'll still see money flowing into South African equities.
Just touching on that rand, 1788. Of course, we welcome this. Rob, I'm wondering, if there are any further missteps we could see from the political realm that could lead us back into that 18, maybe even 19 territory, or have we now, accepted that we'll play around this 17 mark?
Well, the rand is always very difficult to call, but I think that if we see the GNU slowly getting things correct, I don't think you're going to see a 19 Rand 40 level again. And if they start to execute, then I think the risk is actually to a stronger rand. So, if you start to see problems with the GNU and no one can make decisions, etc., on government levels and on the provincial levels, then you'll start to see the rand wobble again. But I think, at the moment, everything is in line for a stronger rand. And we'll see if that continues later today with the placement of the new cabinet today.
Another one that we've seen this week, NVIDIA. That's now the world's most valuable public company. And I always say that I'm always surprised by how much more NVIDIA can rally. Every time I think it's kind of topped, it tops it even more, Rob. Let's talk about that. And even looking at the stocks that support NVIDIA, I think that's where most retail investors may also still be able to play.
Yeah, so after the split, NVIDIA went from about $1,200 to $120. And then rallied a further 10% up to about 132. So, after the split, the stock rallied again, and I think that was expected as smaller retail clients could now own NVIDIA. It is getting very toppish. It's run a few 100% over a year. And if you've held it for a good few years, you're probably up 1,000% on NVIDIA. The AI demand is definitely there. They cannot produce enough chips, so I do not think there's going to be a collapse in NVIDIA anytime soon. But it is getting a little bit rich after such a long run, and people are slowly starting to take some profits. But anybody that's got a big holding in NVIDIA is going to sell some down, but they're definitely not going to exit this position. So I think that NVIDIA can run for another 18 months while the AI boom carries on. But semiconductors are cyclical, and they have very big run up and run downs when there's oversupply. At this stage, supply is restrained, and I think that NVIDIA can carry on at these levels for some time.
And then other company news this week, I think I was very impressed to see Telkom emerge quite strong there. I'm keen to get your thoughts on this one. It does look like them holding out on being acquired may actually not have been too bad of a decision.
Interesting. One of the biggest issues was how much debt they had. And even though they're trying to fix their business, the debt was a problem. But after a lot of sales, restructuring of their business, etc., they've brought that debt number down quite considerably. And now they're starting to make revenue from the mobile and data side, whereas initially they were growing that business as a loss. And now they're starting to make profit from there. So I think really good on the data side, really starting to make an impact on Telkom's numbers, and the legacy business is making less and less part of the business. So, they're in quite a good position, and if they can carry on competing with Vumatel and MTN and Vodacom on the data side, I think they're looking at a very good level. They've got lots of good assets on the property side, which they can still get rid of. If they carry on lightening on their property assets, I think they're looking at quite a good business going forward on the data side. So quite a good set of numbers there. They've still got a long way to go, and they still do have to reduce debt. But I think it was a good solid set of numbers. And if we get a good improved South African GDP and some spending coming back into the economy, it will help them with their restructure.
Speaking about spending, FMCG Group, Lipstar also came out this week with a set of numbers. I was also rather impressed with them. Of course, we know that consumer-facing businesses at this point are bound to be, in some sort of a pickle, but they've managed to actually edge out some growth here. And I'm wondering, just looking at Lipstar as a business here, with its competitors, the likes of Tiger Brands, might this be the best place to be at this time?
It's still a difficult environment. If you take a look at their numbers, they did quite well. But if you look at revenue was down, and if you look at volume was down. So they managed to increase their margin, and they managed to get some profits through. But on pure volumes are still negative. So that is a problem across this whole sector, and you really need a slightly stronger South African consumer to help these businesses. So they're getting really tight. They're running their business well. Any loose ends or any cost structures that they can get rid of, they've got rid of. So they're running really lean, which is positive. Same with Tiger Brands and AVI. So you just need the GDP to come to market, and then you'll start to see real growth come from there. But I think you have to wait to see if we're going to get that growth from the GNU, and whether money starts to flow again in the economy. There is a lot of money on the sidelines, and that could flow into the economy, and then these businesses will do well. So I think it's something to look at, something maybe to add to your portfolio, but I'd like to see some improvement of the consumer sentiment as a whole first, and then I'd quite happily add them to a portfolio.
Well, Rob, I want to get your stock pick in a bit, but first I'd like us to maybe take a look first at counters that have found favor with industry peers.
I'm going with Towell Semiconductors. It's in essence a foundry, the manufacturer of the semiconductor products on behalf of all these players like NVIDIA. We've seen a cycle where these AI chips have been designed by the likes of NVIDIA. They now need to go through the factory to be produced so that they land on the data centers where they're needed and used. So I would probably say that it gives you access to that rally without having to pay 70 times like in NVIDIA. It is a lower return relative to NVIDIA, but certainly a very good business.
I'm buying PEP today, PPH, Pepco Holdings. So I'm looking to add exposure to my SA Inc. basket, and PEP hasn't had the rally that some of the other retailers have had. PEP's up sort of 5% over the last 3 months, whereas Foschini Group's over 25%. The reason why PEP is lagging is because there's a 30% shareholding that Steinhoff still has, which has to come to market. They're going to place it like we saw Momentum. Some of the shares were placed yesterday.
I'll go for Harmony because I expect these gold prices to continue to stay at elevated levels, and especially if the guys are producing more, selling at higher prices, that should work for them. And you look at their PE of 11.2, I mean, it's just in the mid compared to their peers.
Quite a mixed bag there, Rob. TSMC, Pepco, as well as Harmony.
Yeah, so on the gold side, we like gold. We think you should have some of it in your portfolio. Currently, we hold Anglo Gold and not Harmony, but Harmony's, very geared to a strong gold price, and that gold price is holding out. So nothing wrong with holding Harmony over one of the other gold miners. So we do like gold. We think you should have it in your portfolio. Not a very large portion, but you could have some gold in your portfolio. So happy with Harmony. Taiwan Semiconductors, it is an alternative to NVIDIA. They're also building factories, so at the moment they can't produce enough chips for the market as well. So I think this is a good time to own them. But as soon as those factories come online, I think that will be the trigger to maybe exit the semiconductor sector. So they're building new facilities outside of Taiwan as well to get some risk away from China. And once those come online, you'll start to see that supply will come online very quickly. So I think that will be the key to look at for Taiwan Semiconductor. So own them now, and as that factory comes online, maybe start to take some profit. Pepco, we like Pepco, but it's not our best pick in that sector. On the lower end, we prefer Mr. Price. We think that their price points and their fashion is slightly better, and they don't have they've got a slightly broader LSM group that goes to shop there. So we think Mr. Price is better than Pepco, but Pepco's got a nice business in Brazil. So keep an eye on that Brazilian business. If growth comes from Brazil, then maybe you can add it. But at the moment, we're not a buyer of Pepco.
And then Rob, which counter? Yes, sorry, please go ahead.
No, that's fine. Carry on.
Which counter are you loving this afternoon, Rob?
Well, my stock pick for the last few weeks has been First Rand. And after this big rally, I actually think I'd probably lighten my position in First Rand around 76 Rand. So, we like the banks. We want to own banks consistently, but I think this rally that we've had now is an opportunity to take a little bit of profit out and re-enter maybe a good few percent down. But I think my stock pick today would still be the banks, but a little bit of profit taken at this point.
Wonderful, Rob. Always a pleasure speaking to you. Have a fantastic weekend. That was your midday markets update with Sasfin Securities and Rob Towell.